This is another Bad Credit Maids credit repair tip of the day.
All right, so how can you start building your credit with no credit or even bad credit? And if you haven't already, make sure you hit that subscribe button. So when it comes to credit, a lot of you guys know, or you may or may not know, but pretty much at some point in time, you guys are gonna need credit. Same thing with me, everybody's gonna need it. You know, me and my business partner, Samir, we actually got started in e-commerce and drop shipping, and we were able to go from 0 to 224 grand a month, utilizing credit. If it wasn't for me having the credit available to start the business, we probably wouldn't have been able to scale to that amount, and we definitely wouldn't have been able to scale as fast. Because again, the way that e-commerce works, it takes some time after you make a sale to get the money deposited in your account, and you have to pay for ads and your products and things like that. So obviously, if you don't have much resources when first starting off, then it can limit your business. And when we first got started, we didn't have much resources. We probably had $2,000 max that we can afford to invest in our business. So credit was huge for us. But what I wanted to talk about today was 2 different ways you can actually start working on your credit, even if you have no credit, if you're just getting started, or even if you have bad credit, right? There's a few resources that you can take advantage of and use, to kind of get started, right? How to start building your credit with bad or no credit. So for anyone just getting started, one thing that I thought was super funny is that when it comes down to getting started with credit, it's like a catch-22, because you actually need some type of credit or credit history to actually get credit. So regardless, you're literally gonna need credit at some point in time. Even just to get started with credit, you need credit. For anyone that's just getting started, right, with credit, maybe you might have, let's say you have a score under, let's say you have bad credit, right? You have a score under 600, which is completely fine, because obviously we all got to start somewhere, so there's nothing wrong with that. One of the ways you can get started is with a secured credit card. And the second option you can also use for any, if you have bad credit or no credit, is what's called a credit builder loan. Now this is actually pretty cool, because when I was first getting started, I actually didn't know what a credit builder loan was. And I'm actually just, recently starting to learn more about it and how it works. So I figured I'd also share that with you guys, because I know obviously you guys want to utilize different resources that could possibly help, and some shortcuts that could help you save time. And this credit builder one is actually pretty cool, and it's one of them. The way a secured credit card works is pretty simple. So basically you would go to a bank and you would deposit, let's say 5, it depends on the limit. The limit it all depends on the bank and your credit and things like that. But basically you would go to the bank, you would give them a deposit of, let's say, $500, and they would hold that as collateral. And what they would do is they would then give you a credit card that has a $500 credit limit, and you'd be able to use that credit card to pretty much buy anything. The reason why they require that $500 deposit is so that they can have it as collateral, because of course you're coming in to them, as a brand new person with either bad credit or no credit. So obviously they need to have some type of collateral in case, in case you can't make your payments, or, for any reason you miss a payment or anything like that. So obviously they need to have some type of collateral, because you have no history. This is actually a great way to get started, because it pretty much, guarantees, even if you miss a payment, they're gonna have that money there, available to, secure that payment. So usually it ends up where secured credit cards ends up being a great way to get started, because you're securing, whatever you're spending, that it's pretty much already secured, because you already had that deposit there in the first place. So again, this doesn't mean you want to get crazy and just, put down a deposit, get the credit card, and then spend it right away. You still want to watch how you spend, when you're first getting these credit cards. But this is one where you can get started. And the best part is, after you start building like that history, you're paying it off on time, and things like that, they report all the history of your payments and everything to the credit bureaus, and that starts to slowly build your credit. Now from there you can then increase your credit line and things like that. But this is a great way for anyone to get started with zero, with no credit or even bad credit. Usually you can get approved for this, almost all the time, I would say, because again, you are given a deposit for the credit that they're giving you. So it's pretty much guaranteed. The next one is a credit builder loan. Now this is something, again, that I didn't know too much about. I actually just recently started finding out, a lot more about it. The way that a credit builder loan works, it's not like a traditional loan that you would get to get like a Lamborghini or to get a home. Obviously we want to get a loan for those things maybe later on at some point in our lives, but for anyone just building their credit, you're probably not going to want to get a loan to get a car or get a house. You probably won't be able to get one, and if you do get one, you're probably going to have some insane interest rate. So obviously you don't want that. All right, so the way that credit building loan works is, so you basically get a loan, and the way that the loan works is that the bank that you get the loan from, they'll take it and they'll put it in a separate savings account. And what you do is now you start to make your payments towards the loan that you have in that savings account. And what happens is, with that loan that you have out, you actually get to, obviously make your payments on time. You get to practice on that. But what happens is you also get to utilize, the history of you paying your, that same payment on time, and they end up sending that credit history onto, the different credit bureaus. And that's obviously huge because, again, if you're taking out a loan, you're not spending it on just anything. It's actually a loan that's going to help you build your credit. So it's more of like an investment into yourself. I think this is huge personally, just because, again, it's a real easy way to, start getting that practice and getting in the habit of, making your payments on time. Because, again, this loan is obviously, not for something specifically, but it's more for your own credit. So obviously, if it's something that is for your own credit and for your own good, you're going to strive to make the payments on time. At least I'd hope you do. That would be the right thing to do. When it comes to credit building loan, you do have to look for specific banks that do them. I don't think every single bank does them, but there is specific banks that do them. And then what you want to do is you want to make sure you go through everything and you find out, what kind of interest is involved, with that loan. Usually there is some kind of interest. So I would then negotiate a little bit either with the same bank or maybe look at different ones that you can also take advantage of that may or may not have, a lower interest rate. Obviously, the lower interest rate, for those of you guys that don't know about interest rates, basically the higher interest rate you get on a loan, the more you end up paying long-term for the loan. The lower interest rate you get, the less, you end up paying long-term for the loans gave you. So you want to make sure you're looking for one that has a lower interest rate. Now, when you do both of these, it's pretty cool because what will happen is when you're doing both, it'll actually start to build your credit a lot faster than just doing one. So if possible, definitely start off with a secured credit card because almost all the time you can do that. Now, a secured loan, that one's might be a little bit trickier, but it's still very possible to do it. After you started building credit history and had some trade lines in, now you're gonna have, for anyone that doesn't have a credit score, after you start doing these things, you'll basically now start to establish, some type of credit score or, some type of credit now. Now you're officially gonna have some credit, and it may, it could be anywhere. Usually the credit score it starts off anywhere from, the big companies are FICO and VantageScore. Those are the most commonly used scores. And it starts off from as low as 300 or it could be as high as 850. So obviously you might, when you're first starting off, you may be a little closer to the 300 range, but then from there, obviously you'll work your way up. And if you have some type of credit already, maybe below 600, you'll just start to see, obviously, your credit increase, by utilizing both of those strategies. You start working on your credit as soon as possible. There's a huge benefit to it. First, it indicates that you have a good history of paying things off. You get to take advantage of lower interest rate, right? And this is gonna be huge because when it comes time for you to, let's say get a house or get a car, let's say like a Lamborghini. I only say that because obviously, I like Lamborghinis. If you don't have good credit and, you try to apply for a loan, one, they may decline you from the loan, obviously, so that'll put you back from getting either the house, the car, or starting a business. Two, if they give you the loan, you're gonna have a super high interest rate, which again, if you get a loan with super high interest rate, you're gonna end up paying, way more on the loan than you're supposed to, right? So obviously you wanna try to avoid that. Those are pretty much like some of the biggest two things. So the ways you can avoid that is, rather than, spending your time and resources trying to just go out there and first thing off the back, like as soon as you get a job, you start making some money, try to, well, it depends, of course, if you have good credit or not. If for anyone that doesn't have good credit, once you start making money or you start getting more opportunities coming your way, you want to make sure you're not taking advantage. You're just trying to, pull out a bunch of credit and get all these unnecessary things. It would be more beneficial for you to work on establishing your credit first before even applying for, these different credit cards. The ones that are different, other credit cards that aren't secured credit cards, or any type of home mortgages or any type of cars, or pretty much any type of loans or credit cards, you would want to stay away from when you're first starting off and building your credit, because when you're applying for loans, credit cards with a lower credit score, what's going to happen is you're, again, going to get either declined for the loan, or you're going to get a really high interest rate, and you're going to end up paying a lot more for that loan or credit card than you would have if you would have just waited, started to build your credit with either of these two strategies, and then applying for these credit cards or loans, later on. Again, want to make sure you guys keep those things in mind. Again, credit is huge. I personally wish I would have started learning about credit a lot sooner, because for me, like now that I'm constantly using credit for different things like, investments, credit cards, and doing all these different things, again, they had to pull my credit for me to get a phone. I was like, imagine if I didn't have credit, I wouldn't be able to get a phone. When I got my first car, my first BMW, luckily enough, I'd already spent some time building my credit. So obviously I was able to get the BMW, not have much of a deposit down, and not have as high as interest. So obviously I was able to utilize my credit for that. And also when I, moved into an apartment or, you know, I'm living in this apartment here. I've already moved a few times here in California. I've been able to utilize my credit and not have to have any types of high deposits. And same thing with like buying a car. If you have bad credit, they usually require a lot higher of a deposit and a lot higher interest rate. So bottom line, focus on building your credit. Start doing it as early as possible. It's going to be super beneficial in the long run.